The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the June 27th. Fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a terrific Thursday out there. Let's make sure that we do all that we can do to have not only a fantastic Friday, but a fabulous weekend. It is the summertime. I tell you what, I'll do everything that I can do during the next hour to teach you how to master the tools for trading, and that includes the tools of the mind. Because when you and I, when we master the tools of our mind, we begin to think like a strategist. And that's really important as it applies really to every aspect of our life, especially trading. Now, some of the tactics that we use in technical analysis are different patterns like A to B equals CD, Fibonacci expansions and retracements. Those help us to identify Gartley and butterfly patterns, and, of course, Japanese candlesticks, because these are the signs that the bulls and the bears make for you and I each and every trading session. And unlike most traders who focus on tactics only, you and I, we know that to really achieve our goals and dreams, we've got to always think like a strategist. Now, the real key to trading and investing and to get our money to work harder for us than we do for it is to have a strategy. And that's what I call Mastering Probability. Also happens to be the name of my daily newsletter service here at TFNN.com. You see, using tactics without strategy is a recipe for failure. And failure, folks, is not an option in our playbook, which is not to say that we don't incur losses, because losses are a part of any trading strategy, any successful trading strategy. It's what we call spoilage. Just as running a household means that we're going to throw some things out of our refrigerator from time to time. Now, to limit our loss, to control our risk in trading, we always use stops. That means that we have a exit strategy. We use a bracketed order, referred to as one cancels the other. That means we know where our stop is. If the trade goes against us, we know what our target is. And there's no better time to put that on, folks, than before you've entered the trade. That's when you are most objective about a trade. So make sure that you always use that. And if you use a system like that, folks, if you had used a system like that, if you would always use stops, any markets that were making significant corrections, doesn't have to be from 2007 to 2009. It could have been May of 2011 as the flash crash was out there. All those things, folks, if you do that, you're going to do what's best, which is to protect your capital. So today and every day, let's do what we can to think like a strategist, because strategists will slay the tactician all day long. Let's take a moment. Let's review one of our tools, a tool I call 6 fundamental tools for success. Things that make you say, something to think about. Tool number 1, character isn't something we were born with, not like our fingerprints. And if that's the case, it's something that we can change, but we must take responsibility for forming it. Number 2, if you don't make plans of your own, guess what? You'll fit into someone else's plans, and that begs the question, what do you think they have planned for you? Something to think about. How about number 3? There are so many possibilities of greatness, whether it's great wealth, great reputation, great satisfaction, so many different opportunities out there. Any of these or one thing, any of these or other things come when we turn our attention from ourself to others out there. It was a little multitasking there. I shouldn't have done that. Number 4, a courageous person is not someone who never feels fear, but who fears the right thing at the right time and in the right way. Number 5, the will to win is worthless if you don't have the will to prepare. And finally, number 6, if one should give you a dish of sand and tell you there were particles of iron in it, you might look for them with your eyes and search for them with your fingers, yet be unable to detect them. However, if you had a magnet and you swept through that pile of sand, all of the almost invisible particles, by the mere power of attraction, would be attracted to that magnet. Well, here's the deal. The unthankful heart, like the finger in the sand, discovers no mercies. But let the thankful heart sweep through the day, and as the magnet finds the iron, so it will find in every hour something to be grateful for. Folks, I'm grateful for your presence here today. It is Fantastic Friday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow Futures trading off 32 points. They're trading at 16,729. S&P Futures off 4.5, trade out at 1944. NASDAQ off 5 points at 38.12. Russell 2000 down 5 points at 1171. King dollar back 9 pennies at $80.18. Goldilocks up $2 right now, trading at 13.18. Silver up 1 penny at 21.12. Light sweet crude up 18 pennies at 106.02. Our call-in number is 877-927-6648. A quick peek across the globe. We'll see over in Germany, the DAX is up 15 points. Congratulations to them for beating our boys over in Brazil. Of course, only beating them by one goal out there. Allowed Team USA to move on. Over in the UK, the FTSE's up 13 points right now. Over in Asia last night, the Nikkei down 213 points off 1 3/10%. Hang Seng up 23 points. That's a flat session for it. It closed out at 23,221. The Shanghai off 2 points, a flat session for it as well. So, okay, where do we begin our day? Let's go take a look at, let's go take a look at the daily contracts for the futures. If you're watching us on TigerTV, or obviously if you're in a den, you're watching us. But if you're watching us on Tiger TV, we appreciate that. Just as much as we appreciate everyone listening on the radio, your mobile device at tfnn.mobi. Don't forget, you can always see the live stream of this show by going to the homepage of tfnn.com. Upper right-hand corner, you'll see a button, 3 little smartphone devices on it. And what you will, if you click on that, you'll be able to see this show streaming to you live. Now, what you would see, if you're looking at my screen, you would take a look in the upper left-hand corner, the daily charts. These are all daily charts. The S&P futures in the upper left, the Dow futures in the upper right, the NASDAQ futures lower left, the Russell 2000 in the lower right out here. And if we take a look at it, it's really the struggle here between the Bulls and the Bears. Of course, I guess that goes without saying. Now, the Bears really in the Dow futures. So we'll take a look at the Dow futures first. Dow futures, if we take a look at them, trade out at 16,728. They are the struggling index out here. A struggling futures contract as well. It's trading below its market profile low. What does that mean? That should be a level of support that holds. Now, the day is not over. If you see the Dow futures close above 16,769, it means it's trying to chisel out a bottom there. It keeps testing the lows. And if it can hold that level, good. If it closes below 16,769 today, well, it will. It's not a good message. It'll be the first time that it has closed below that level since June 18th out here. So a little over a week in trading sessions out there. And what it suggests a move down to the swing point for May 20th. That's anywhere in the range of 16,238 to 16,433. A move down to that level, maybe it's just simply a retracement. A retracement would take you to either the 0.618 level. 618 would go ahead and take it about the 16,449 area. 0.786 retracement taking about this 16,384. That's just a normal set of retracements. That still keeps the uptrend in place out there and might be set up the C point of an A to B equals CD to the upside. That is the weak link in the chain out here, which is the Dow. If we take a look at the strong link out here, well, the strong link is going to be the NASDAQ. Now, the NASDAQ futures out here, they're trading above their unfair high, their resistance level of its market profile. That's at 37.99. They are trading, at the near the swing point that took place on June 24th. Little key reversal type session out there. That high is at 38.28. A close above 38.28 today, that would be extremely bullish out here. Close back below 37.99. Well, it just starts to get into kind of the bullish to neutral-ish type territory. The NASDAQ really creates problems for the market if it gets below 37.6230 out there. So there's the fight between the Bulls and the Bears. As far as the Russell 2000 and the S&P futures, they're really in neutral territory. They're not really providing us with a ton of information. If you take a look at the S&P futures out here, the S&P futures are trading right around their congestion area. You know, if you're driving on the expressway today to work, you know you're going to run into some congestion areas. And inside of the S&P, inside the S&P futures specifically, that's right around the 1946.55-ish level. You're at 1943. So long as the ES Mini S&P futures is able to hold 1934 and a quarter out here. You're just really in some type of trading range. You close below that, well, then you're going to have the S&P futures and the Dow against the NASDAQ futures. That's the bulls and the bears. If we take a look at the Russell 2000, really the same kind of thing going on out here. Now, the Russell 2000 is one that made its most recent, newest. Oh, that sounds really good. It's made the newest market profile. That took place a couple trading sessions ago. That says the key level to be watching here is 1168.35. That is the support area. A break below that, that then starts to say, okay, now you got the Dow, you'd have the Russell, maybe the S&P futures teaming up against the NASDAQ out there. Now, what's interesting here, if I go switch over, so we take a look at the weak link out here. And it's unquestionably, the weak link is most certainly, if we take a look at the markets came crashing down yesterday. Let's go take a look at that. Let's do this here. Let's go look at the strong index out here. Let me switch this over to the NQ so we can take a look at exactly what went on. That might be the best thing, right? Let's get our Q from the NQ. Let's put up a short-term time frame out here. Let's put up a 10-minute chart. That way we'll really be able to see the volume bars and what the market was doing. Of course, I'm waiting strategically for that to pop and populate my screen out here. So if we take a look at the market yesterday, right out of the gate, as soon as the market opened, we saw selling. So some group, was selling the market there, and the market had popped just before we came on the air at 9:30. We saw a little bit of a pop inside the market out here, inside the NQ, and then as soon as the cash market opened, it was selling right out of the gate. Look at these volume bars down here, this little second panel from the bottom up here, all these volume bars to the downside. And then what did the market do yesterday? Nice counter-trend rally. Made it all the way back towards its highs with no volume at all. 877-927-6648. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So as we were going into the break there, we saw take place yesterday is big moves down with volume, light bounce on the way up. So there's some sellers out there, definitely some sellers out there. We'll see if they are taking the day off and trying to get a nice little 4-day weekend in, Saturday, Sunday. I guess maybe a 3-day weekend it would be out here. Of course, maybe it looks like they actually they were in yesterday early, and they left right around 11 o'clock, 11:30 yesterday to head to the beach out there. So I guess sort of a 4-day weekend that maybe they're going to get in. If you were to ask me what's my best intuition as to what the market will do today, even on a push lower, I suspect it will finish flat, maybe a little bit higher out there. I think that that's likely what's going to occur here for the next couple days as we close out the month of June. But no question, beware, there are more sellers than there are buyers in the marketplace, at least with regard to thrusts of volume. Now let's take a look at some things here that are moving in the pre-market. Leading the charge right now, dollar-wise, to the upside, you've got Manitowoc Inc. MTW is the ticker symbol. It closed at $29.71. It's trading at a nice $32.75 right now. It's going to take out a B point, it looks like, small B point, with I would assume with volume. But what it's going to run into, let me take this back here again. Let's see, it's priced out at $32.76. So 32.76 is going to take it all the way back, quite frankly, to its swing point from May 1st out there. The low of that swing point was 31.60. The high is 33.46. Now, there was some pretty substantial volume off of that high. So off of the top, volume off of the top. It's the first time that we saw any kind of institutional selling in this recently. Again, MTW is a ticker symbol. That took place on May 2nd. Had 11 million shares to the downside. Price had come back right into what? Right into a breakout area that actually had more volume to the upside, and that was 16 million shares and change, and that was on the trading session of January 31st out here. So this has come back into a support issue. It never got down to really test the low of the breakout. The real low of the breakout would have been the gap up from January 30th. That would have been, your second level of support. Your first level of support was the low of January 31st, which was 26.36. Never got all the way back there. Got down to 26.80, and 2.4 million shares were pushing up against 16 million shares. So certainly not enough to bust it down. What does that set up? Really sets up most likely a consolidation range unless it's able to take out this high from May 1st with volume. If it can do that, that'll set up your A to B equals CD to the upside, and that is MTW is the ticker symbol. That is the leader in the upside right now, dollar-wise. You've got Nike just behind them. Nike out with their fourth quarter results. Looks like they topped their estimate. They did $698 million versus $662 to the bottom line out here. Looks like that net income revenue, $7.4 billion versus $6.7. So not too shabby there. They closed at $76.86. Right now trading at $78.60. Let's go see what it's going to take on. $78.60, big gap out here with volume to the downside. So Nike is going to try to close that gap. We'll see if it acts as resistance. That gap meaning the low of 77.77. That's a nice little slot machine. That happens to be the exact low from March the 20th out there. We'll see if it can close above that. If it can close that, it'll close the window, it'll repair that window. And, in fact, if there's some volume behind the move, that could set up an A to B equals CD to the upside. So all it needs to do today, really two things. You're looking at the B point of a potential A to B equals CD. That's that lightning bolt pattern. That is the June 2nd high, and that is 76.99 out there. Now, getting above that with more than 1.9 million shares is one thing, but we also have to recognize it was really going against 15 million shares, that downdraft from March 21st. So not to make it too hard for itself, but it really needs to have more than 15 million shares in order to really confirm that that downdraft was not real. Otherwise, you're looking at Nike, and it's a really nice consolidation level. So let's say Nike gets all the way up to the highs, its most recent highs, March 18th. That's at a level of about $80.08. And if I were to draw a little box out here, I can do that. Let's do that for you out here. Here is the consolidation with inside of Nike. So it's basically $80 down to a low of about 69. We'll just call it 70. So you get a nice little $10 consolidation range with inside of Nike. It's been in that range ever since a nice little breakout session that took place back here on September 27, 2013. So, not suggesting that you sell short, but you could play the consolidation range if it can't bust out the highs out here. But a nice buy inside Nike, if it gets back down into the area, let's say maybe about $71 or so, might be a nice little buy if you were looking to buy Nike, NKE. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 20 points out here. S&P down 3, NASDAQ off 4, Russell 2000 off about 5, NDX 100 flat out here, New York Stock Exchange off 15, Goldilocks up $1.70, silver is flat out here. Lead the charge, the upside is Green Mountain Coffee Roasters up $4 and change, up a little bit over 3%. Manitowoc Inc., we took a look at that earlier, up about $3 here. Nike up about 2. Meta Sys, AMED is the ticker symbol, up 10%, up $1.40. GoPro up $1.60 right now, trading out at about the 33 level. Finish Line up $1. Aware Inc. Up 16% this morning. AWRE. Those are the equities leading the charge. The upside to the downside here. Dollar General, DG, is a ticker symbol, off 5%, down $3. DuPont off $1.74. That stock chart looks pretty bad. We'll look at it. The Rock of Gibraltar, ROCK, is the ticker symbol. It's off 10%, down $1.78. ISIS Pharmaceuticals down $1.18. Family Dollar Store off $1.55. Amazon down $1. Philip Morris down $1.41. Let's go take a look at some of these individual stocks, see what they're doing now. Let's take a look into the downside first. Let's start off with Dollar General, the leader in the clubhouse, off about $3 here this morning. Trading below on its daily chart. It's unfair low, so below a support level. Let's see, volume so far. So it's coming. This thing had a nice wide price spread, accelerated volume. I think that was Dollar General. Was that the... Was that Carl Icahn taking a position inside of that equity on that trading session? Maybe that's when it was announced. That was on June 9th. So big volume. It doesn't really matter whether it was or it wasn't. Let's pay attention to what the most fundamental aspect of the Dollar General is telling us, what the current shareholders are doing as we speak right now. So it does make a high out here that's not been tested. It says eventually, at some point in time, that high ought to be tested. That's about $65.99. The day that it broke out, 25 million shares to the upside. Now, we've only been trading for 6 minutes, 6 to 7 minutes out here, but 1.4 million shares to the downside. It's really coming into the breakout area, a bit too hot. We'll see on a Friday. Volume ought to dissipate relatively quickly. If it does not here, what does that say to Dollar General? Where's Dollar General headed to? Well, you'd have to come all the way back to, its most recent swing point low. That should be right around the level of May 30th in the area of $53 even, Steven, to $53.82. That's on the daily chart. Let's take a look at a weekly chart. Let's move this over to the weekly time frame, see what its message is out here on Dollar General. Take a look at a swing point. Take a look at its unfair low. So 54.07 is an area that should act as a support. This is also really saying that it ought to find support right here. It ought to find its legs right around the 57.93-ish type range. But if it closes below that, 54.07, the swing point back there from the early part of May is where it likely is headed to. And look, if it's coming into that swing point with volume, that's anywhere between a range of $53 to $56.44 on its weekly chart. And coming down with 25 million shares or more, that would not be a good thing for Dollar General. So far for the week, we're at about 12,500,000 shares out there. Dollar General on the daily and the weekly charts out here. Let's go see what else we've got. Moving and grooving, you've got Family Dollar stores. So in Dollar General, you've got the CEO is retiring. Maybe he doesn't want to put up with the BS from Carl, if that's who's in the deal out there. Can't say that's the reason why. And maybe it's not even Dollar General. I could be wrong on that. Family Dollar store, though, that is trading off about 3% this morning, down $2. Let's go see what that is doing. This too, maybe it was Family Dollar store. That was the Carl Icahn day, for all I know. Was that a big wide price spread and accelerated volume on June the 9th out here. So it's trading now down. And that, by the way, volume, that's a high volume high. That level is $70.30. It does say that price will be back up there at some point in the future, that it should be up there. That's its current message right now. However, what its real current, its most current, we're talking up to the minute message, is a mere fact it's trading into a swing point low here from June. There, it's trading to a swing point from June 12th. It only has 1.5 million shares, and you're down here already with 568. So now it's going to get into the gap out here. Where it stops, nobody knows. Maybe it's going to come all the way down and close the gap, get back to the breakout session, and if it can come back to the area of somewhere around $60, that's what you're looking at, the low, 60.66. Ideally, you'd like to see it do that with less than 2.3 million shares out there. That would be your buy, as long as it's coming back with a light volume. But first, you're going to have to clear the candle session from June the 12th out here, and that low is $65.30 out there. That is on FDO, Family Dollar Store. Let's take a look at Flowserve. FLS is the ticker symbol. It's down $1.85, down about 2.5%. So far this morning, gapping down. That candle looks like a hammer candle. To me, what it's doing is gapping down. Let's pull this back just a little bit further. It's running right into its most recent swing point, which takes us back to April 28th. 1.4 million shares traded on that session. Down this morning so far with 298,000 shares out here. But it looks like it's an area that is being supported. If it gives way, meaning if you were to see it close today below 71.18, that would be very bearish. And I say that because not only would you be below a market profile low out there, you would also be clearing the swing point from April 28th. And only 1.4 million shares out there. That would set up an A to B equals CD to the downside. That would actually give you a price projection right around the area, because it uses my swing point, my A point, the high on February 24th. The low is the B point out here. That's the A to B equals CD to the downside. That's the April 28th low. And the C point would be the most recent retracement up on the trading session of June 20th. 1-to-1 would give you a price projection of $67.91. But right now, it's holding its own at that swing point, and that is on Flowserve. FLS is the ticker symbol. How about DuPont? I mentioned DuPont here. I was looking at this stock chart, I think, earlier before the market opened out there, noticing that this thing was going to gap down. Now, DuPont here, it's important that it holds the lows here from March. This is a daily chart. We're looking at the low out here is 65.38, 5.6 million shares on that trading session. So far, it is holding that area, but it is down with some volume. It's already done 1.4 million shares in the first 11 minutes of trading out here. So DuPont, this is not looking good for the stock. This should find resistance up at about the 67.50 area. So it looks like we've got some real sellers inside of DuPont. And you've got to be careful because this thing has a high volume bar down here on the daily chart back on February 4th. And if it closes below Let's make it the easiest. If it closes below that March 13th area of 65.38, that's what it will do. It'll gravitate just like a magnet, just like a magnet. It'll go ahead and pull price all the way back down to that volume bar on the trading session of February 4th, anywhere between 60.36 and 62.42. That's what's going on with DuPont out here. Let's take a look at some things here. Moving to the upside, you've got Green Mountain Coffee Roasters out here. It's up a nice 3.5%, up $4 and a change out here, but it's running into resistance. It's a market profile high. It's swing point high. That swing point, by the way, is from the trading session of June 17th. 5 million shares up there, the top of which is 128.04. 126.54 is a resistance zone out here. If it could take, let's have a nice sign of strength, no question about it. Nice sign of strength out here on May 13th. So if it can take out and close above the high of 128.04, that would set up an A to B equals CD pattern to the upside. But right now, expect that Green Mountain Coffee Roasters will run into resistance around the 127 type area. You've got Manitowoc. We already looked at that. Let's take a look at this Amedisys, AMED. Is a ticker symbol. It looks like they only have a range for their revenues, but boy, nice wide price spread as we're speaking today, up a nice 19% as well. It's got some volume behind its move also. So this is up off its lows. It's taking out its most recent swing point high, and that was from May 15th, only 937,000 shares there. Today already 400,000 shares. So this thing, where is this going to head to? Let's pull this back. Looks like it is going to take on its, headed back to this. Yeah, it should find resistance. If we take a look at this equity here, looks like maybe a bit of a consolidation. I'm pulling it back, folks, to the trading session in November 12th, 2013. November 12th, 2013, this equity moves. I'm sorry, it was November 12th, moves down with 3.3 million shares. And that gap, in essence, it got closed. So that window was closed on the trading session here of February 27th. But the real breakdown area is right here. I don't know if let me try drawing a straight line across here. I'll try to do that. Well, that was basically pretty poor of a straight line. But I think I can move it down. Let me try doing that. There we go. So the white line going across my screen out here, that horizontal line with the little arrow on it, that really should be the resistance area for AMED. And you can see the consolidation. Maybe I'll just draw the consolidation pattern in here. That might be a little bit easier. And that's what this. That's what it looks like this equity here is really doing. Here's your consolidation range out here. So we already took a look at one consolidation range this morning. Here's a second one. That second one says the top of consolidation about $17. The bottom of the consolidation right around $13. So you've got a 4-point consolidation out here. If it were to take out the consolidation high, if it were to take out the February 28th swing point high at 1761, it offers a price projection of $4 to the upside. Otherwise, just expect this thing to be consolidating. Your next buyout here would never short a $17 stock, but your next buyout here would most certainly be in that $13 range out there, and that is on AMED as the ticker symbol. If we take a look at, let's see, what else? Percentage-wise out here, looks like we got Progress Software. PRGS is the ticker symbol. It's up a nice 10% this morning, up $2 and change. Let's go see what it is doing. Oh, this is traveling right into a supply line. So this thing here had, so these folks on the trading session of March the 6th, and there were 127,000 shares that traded hands that day. All of those folks were really glad to see this thing gap up this morning, and they're just taking their money back. Why do I say that? Well, because on the next trading session back here on March the 7th, gapping down with 1 million shares out there. Now, today, the move up top side, not too shabby, 141,000 shares, but it's got a supply line of 10 times that, and it looks like this is going to run out and peter out right around the area of 25.08 or so. It's trading at 24.52 now. If it can get a real sign of support, because it's got the wide price spread, if it can generate more than 1.1 million shares out there, then that would change the outlook for this. But if we take a look at the relative strength reading out here, we'll see it is extremely overbought on this pop-up up here, up at the 78.31 level. That is on Progress Software Corp. PRGS is the ticker symbol. Let's go check out Goldilocks and Silver Light Sweet Crude. Let's go see what they're doing here. Gold contract up right now about 80 cents, 70 cents out here. Let's take a look at the daily chart. Let's expand this out here. Now, we know there's a new market profile that formed a couple trading sessions ago. That was yesterday, actually. On top of which is 1326.60. So in order for gold to really find its legs, it needs to get above 1326.60. That could start the next breakout session. But if we look at 1, 2, 3, 4, 5, 6, look at these 6 candles here, and just look at the bodies of these candles. Pretty darn narrow price range out here between open and close out here. We've seen some intra-session spikes. Now, not the normal behavior of an initiation move, which is really what the question is always when you see a wide-ranging bar. Is it the beginning of the move or is it the end of a move? And you don't really necessarily know. Now, there are some characteristics that help you to understand, depending on where and when they occur out here. This was really in the middle of a move, or not so much the beginning of the move. The beginning of the move would have taken place right around June 3rd, 4th, 5th, something like that. This took place on June 19th out here. Now, what I will say, because if you look at the bottom of the screen out here, so this was an exhaustion. There's clearly an exhaustion move. Now, the bullish piece of this being an exhaustion move is that it also got into that extreme overbought condition. And it has been able to work that condition off slightly. It has been able to work that condition off slightly by just simply traveling sideways. So long as gold is able to close above, it's a daily chart we're looking at, 1299.20. 1299.20 might be your next buy point on this if you were to see some type of pullback into that area out here. So right now, I've got to give this, for exhaustion type moves out here, this is pretty bullish looking because of just simply the narrow-bodied candles and moving sideways out here. Nobody yet willing to take it to the next level, so to speak, out here, but it is just nice and moving sideways. That is on the daily chart. If we look at the Hi-Ho Silver, look at its daily chart as well out here. Let's see what we've got. My system doesn't like something on the silver, so we're not going to look at silver here, at least not with this charting tool. We'll go put up a different charting tool because I've got several of them. We'll have to do that when we get back from this breakout here. Right now, we've got the Dow is down 16. S&P is off 69 cents. Pretty flat market out here. Pretty sure we can expect a very flattish type market for the rest of the trading day. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls us with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's off 13, S&P down 80 cents. NASDAQ composite up a couple of points. Before we went to break, I'd mentioned silver. Let me go ahead and put this chart up on my screen out here. And if we take a look at it, normally I don't show charts like this. Normally I'm using candlesticks, but if you're, it's much easier if you're watching this inside the Tiger's Den to be able to see this, because the labeling on the, which I don't control, the labeling on the system out here, unfortunately. So I can't make it bolder. I can't make it larger out there. And folks, if you've never tried the Tiger's Den, you ought to do that. Great group of individuals inside there. The whole key to always being able to increase your skill set, no matter what it is that you're doing, is to always look for a peer group that has a skill set a little bit better than you. If you're trying to improve yourself in the game of golf, I suggest you play with better golfers out there. Tennis, the same thing. Trading, the same thing out there. So if you give the Tiger's Den a shot, you'll see all of our charts here are in HD out here. Now, the chart that I've got on my screen out here, it is the silver. It's a continuous contract here for silver. Let me do this, make it a little bit easier. I'll pull this back just like that. That didn't work real well. Let me try that one more time here. So we're looking at the continuous contract for silver, and what is on the system, all the labeling on my system here. This is the Ensign Windows software. It's being fed by my eSignal data platform. In fact, all my charting software packages are fed by the eSignal charting platform out there. If we take a look at this also has a study on it. So somebody had built a Tom DeMark study. This is called the TD Combo study out here, and it was originally a study, an indicator built for Paul Tudor Jones out here. And what I'm looking for is looking for what's called the TD Combo count, which you'll see a number 9 and then a number 13. So as an example here, the trading session of why is that not out there? That's pretty strange. It looks like February 18th. So the trading session of February 18th, one of my labels is gone out here. Formed a little 9 count out there. And I don't want to go into the details. Tom, by the way, Tom DeMark got several books out there. You can read those books. They tell you exactly how to go ahead and utilize this system. I will tell you, it is one of the more complicated systems that are out there. But if you take a look at the trading session here, looks like on the 24th of February out here, you get that 13 count. Now, that should be resistance, the top of that. And, in fact, it was inside silver. So there was another tool that acted as a resistance point. Price came all the way back down to its previous swing points. Remember those swing points, those major intersections? Always just kind of natural magnets for where price will move to. So you always want to use those as price projection areas as far as your next moves. Now, the cool thing, if you take a look actually down here, I'm referring to the January time frame. So on January, what looks like maybe about the 28th, 29th or so, you got a 9 count. And right here on the trading session of February 3rd, 4th, 5th, whatever the actual trading session is, you got your 13. And that acted as a level of support. So take a look at how this TD combo count worked here. It identifying a bottom back here in the February time frame. And this is we're looking at a daily contract for silver. And as well, it made a top out here back on the trading session of right around the 24th of February. I take you a little bit further on a little tour out here to the left. You'll see a 9-13 count. That's right around January 11th as well as January 17th, 18th around here. And that should have acted as support. As soon as you saw it close below that, one of the things that Tudor Jones recognized early on was when these fail, they fail miserably out there. Well, that it bodes really well for silver, because if we take a look at where we're at right now, you knew Stevie would finally get there, right? You had a 9 count back here, looks like on June 17th or so, and then it looks like maybe around the 23rd we had a 13 count. Take a look at that. Price is over above that resistance area. Looks pretty good for silver. Hi-ho silver. Folks, it is Fantastic Friday. Thanks so much for joining me today. Thanks so much for joining me for the week. Take care. Stay tuned. The Nadex Bull Bear Binary Option Hour is up next. I'll see you Monday morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.